In the glow of city lights where skyscrapers pierce the clouds and markets hum with the pulse of commerce, a single currency underpins it all: the United States dollar. For decades, it's been the world's financial backbone, a symbol of stability trusted from New York to Tokyo. But beneath this gleaming facade, cracks are spreading. The United States national debt has soared past $34 trillion, interest payments alone gobbling up $500 billion annually. Nations like China and India are quietly shifting away from the dollar, trading in their own currencies. Whispers of de-dollarization echo in global capitals, and economists warn of a storm brewing. Could the dollar's dominance crumble by 2025, plunging the world into chaos, hyperinflation, empty shelves, and conflicts over dwindling resources? Let's peer into this looming abyss, where the fall of a currency could unravel the modern world. The dollar's reign began after World War II, cemented by the 1944 Bretton Woods Agreement, which pegged global currencies to the dollar and the dollar to gold. Even after the gold standard ended in 1971, the dollar held sway, backed by the United States' economic might and military power. It's the currency of oil trades, international loans, and central bank reserves. 60% of the world's foreign exchange reserves are in dollars, according to the International Monetary Fund. This dominance keeps prices stable, loans cheap, and trade flowing. But there's a shadow side. In 2023, the United States debt-to-gross domestic product ratio hit 120%, a level unseen since wartime. Every year, the government borrows more to pay its bills, piling pressure on the dollar's value. Meanwhile, global trust is fraying as nations question its reliability. Here's the twist. What if the dollar-ES fall isn't just a market hiccup but a cascade of collapse? De-dollarization is gaining steam. In 2022, China and Saudi Arabia began talks to trade oil in yuan, a move that could erode the dollar's grip on energy markets. The BRICS nations, Brazil, Russia, India, China, and South Africa, are pushing for alternative currencies, with their share of global trade rising to 20%. If the dollar loses its reserve status, the United States could face hyperinflation as imports soar in cost. Picture grocery stores in Chicago with bare shelves, bread priced at $50 a loaf, and gas pumps dry. A 2021 study by the Federal Reserve warned that a rapid loss of dollar dominance could spike inflation by 15%, crippling households. Beyond economics, the ripple effects are grim. Food shortages could spark famine in import-dependent nations, while resource wars could ignite over oil, water, or grain. The risks run deeper than numbers. A dollar collapse could destabilize global markets, wiping out trillions in wealth overnight. In 1923, Germany's hyperinflation saw wheelbarrows of cash buy a single egg. A similar fate could hit the United States, where 60% of families live paycheck to paycheck, per a 2022 survey. Supply chains, already strained, could snap. Think empty pharmacies and shuttered factories. Poorer nations, reliant on dollar-based aid, might face starvation. The United Nations estimated in 2023 that 200 million people are at risk of famine globally if trade falters. Geopolitical tensions could flare as nations scramble for scarce resources. In a 2024 war game, analysts in the United States simulated a dollar crash, triggering conflicts in the South China Sea over oil routes. The stakes aren't just financial, they're existential. Why is this happening now? The United States debt spiral is one driver. Interest payments are projected to hit $1 trillion by 2028, crowding out other spending. Sanctions used to punish adversaries have backfired, pushing countries like Russia to trade in rubles or yuan. In 2022, Russia's share of dollar-based trade fell to 20%, a sharp drop from 50% a decade earlier. Digital currencies add another wild card. China's digital yuan, tested in 2023, could bypass dollar systems, while cryptocurrencies like Bitcoin, holding $1 trillion in market value, challenge traditional finance. These shifts expose a truth. The dollar's strength rests on trust, and trust is eroding. Who's grappling with this? Central banks are diversifying reserves. China cut its United States Treasury holdings by 10% between 2020 and 2023. The International Monetary Fund is studying alternative reserve systems, but progress is slow. In the United States, policymakers debate debt ceilings and spending cuts, yet partisan gridlock stalls reform. A 2024 report by the Congressional Budget Office warned that without action, debt could hit 180% of gross domestic product by 2050. Globally, cooperation is scarce. BRICS nations push their own agendas, while the United States defends the dollar's status. Ethical dilemmas arise. Should poorer nations bear the brunt of a crisis they didn't cause? Who decides which currencies rise if the dollar falls? Efforts to stabilize the system face steep hurdles. Raising interest rates to curb inflation risks tipping the United States into recession. 2022 rate hikes slowed growth by 1%. Debt reduction requires politically toxic cuts to programs like healthcare, which 70% of Americans rely on, per a 2023 poll. International agreements to stabilize trade, like a new Bretton Woods, are stalled by distrust. In 2024, a G20 summit failed to align on currency reforms, leaving markets jittery. Public awareness is low. Only 30% of United States citizens understand de-dollarization's risks, a 2023 survey found. Without collective action, the system teeters. Still, there's hope in vigilance. Individuals can act, diversifying savings, stocking essentials for 3 months, and learning about local supply chains. In 2024, community groups in the United States began bartering networks, preparing for shortages. Governments must invest in resilience, food stockpiles, trade diversification, and debt management. Transparency is key. Central banks should share data to calm markets. Above all, we need global dialogue, not division, to navigate this shift. The dollar's fall isn't certain, but its vulnerability is a wake-up call. As markets flicker on screens and ships cross oceans, the dollar holds the world's trust, for now. Its collapse could reshape economies, empty pantries, and spark strife, but we're not powerless. The challenge is clear. Act before the cracks become chasms. Stay informed, question the systems we rely on, and prepare. The future isn't written. What will we choose?